Traders, how are you? I hope you are well. It's Friday. Woohoo! We've made it to the end of the week. I hope you've still got the shirt on your back after CPI's the CPI data release from yesterday. That was pretty wild. And yeah, we'll have a look at that today, guys. Yeah, we'll look at the aftermath of the CPI data, how that affected the charts and what we're looking at today. So as usual, guys, yeah, we'll look back at yesterday's trades. We'll look at today's potential trades, and we'll also look at the important news for today as well, guys. All right. Before I do, you know, I enjoy a shout out in the morning. Well, my editor enjoys a shout out. I'm just told to do it. Otherwise, I will be beaten. So, yeah, we've got the Discord channel, guys. Yeah, come join that Discord channel. I promise you, you won't be disappointed. There's lots of traders on there sharing great ideas every day. So come join that, guys. The link is in the video description. Also, guys, don't forget our live stream every Wednesday, 6:30 a.m. London GMT. Yeah, we do a live stream every Wednesday morning, guys. We might even start doing more live streams, guys, because we did a little poll yesterday and you said, Tom, we want a live stream every morning. So maybe we'll start doing that. Also, guys, we've got the mentorship program we're running now. So if you would like to be mentored one-on-one with myself, then drop us an email. Again, all the information is in the video description. Right, let's start with yesterday. That CPI data was like, woohoo! It was pretty crazy. So let's start with our first trade from yesterday. It was Aussie dollar against the Swiss franc. Yeah, and we were seeing a bit of Swiss franc strength from yesterday. So price was in a downtrend. Yeah, and it was coming down to this level, and it was difficult to see if it had broken structure or if it was in an uptrend. Okay, and then we started making this level here, yeah, that just kept holding, yeah, and then eventually it broke, yeah, with this very bearish candle here. It broke these lows, therefore structurally we were in a downtrend. Okay, and we had this huge bearish candle, so we were just looking to take price from one of our grays, well, our only gray zone, back down to this blue line here. All right, guys, so that was a trade idea for Aussie dollar Swiss franc to short this pair. If we drop down to the H1 chart now, because this is always our execution chart. And again, it was a bit of CPI happened and then, yeah, how to react really. But this one I didn't trade because I actually traded the pound Swiss franc, and I'll show you that trade in a minute. But yeah, guys, because of the CPI data, pretty difficult to read, really. But price, you know, did come up into our grey zone. It arguably broke it here. And then we got this very bearish candle form here. But it's an inside candle, really. It's inside this candle. Okay, and remember, inside candles, guys, if I want to start shorting this, the next candle needs to stay broken. For if it looked like this, for example, it needs to break out of this red candle's low. All right, so that's an inside candle and how we trade that. And we just didn't get that, guys. Instead, price comes shooting back up. Yeah, we got no follow through with this red candle. There was no follow through. Yeah, because then perhaps we could. But again, our risk to reward would have been terrible. But yeah, there was no follow through. And then we got this bullish green candle happen next. So yeah, we just all bets are off really with this one, guys. Aussie dollar Swiss franc. Yeah, we just stayed away from it after that. If we go back to the day chart just quickly, and again, I wouldn't like to start shorting this bullish candle. Yeah, so for me, guys, for those reasons on the H1, let's have a quick look back on the H1. Yeah, for those reasons on the H1, I stayed out of this pair. Yeah, didn't have a trade. And part of that reason is because of this. The next trade idea, the pound against the Swiss franc, I was actually shorting this one. It was a bit of a reaction after the news had finished trade. Yeah, okay, and I'll explain all very shortly. All right, guys. So, yeah, the reasons we were shorting this were this. Price was in an uptrend, higher highs, higher lows, higher highs, higher lows. Excuse me, higher highs, high lows, didn't really hold this zone, and then price come back down. Okay, so structurally, you can see with my beautiful pink line that, you know, price is in a downward structure, guys. Yeah, because this low here of this candle breaks these lows as well and these lows. Okay, structurally, we're in a downtrend. Let's zoom in, and then you can see this very bearish candle as well. So this bearish candle broke these last lows here. Yeah, so the idea was just to come from our grey zone, potentially down to this higher time frame target. Would I still carry on shorting this today? Maybe, because we've got quite a strong rejection wick here. Aussie dollar, Swiss franc, I wouldn't, but this has potential, guys, yeah? So yeah, we'll have a look at that later. Yeah, and then how did I trade it, guys? I know a lot of you guys in the Discord channel were like, did Tom get in? Did he not? And where I got in was this, guys. So yeah, we had these candles here, but nothing here really tells me sellers are in control, and it hasn't hit our grey zone, but we could have been more aggressive with this trade. And then we come up to here and we get a couple of candles, but again, nothing that tells me sellers are in control. And then bang, yeah, CPI news happens. All right, so sends the market a little bit buck wild, a little bit crazy. But what I did, guys, because I saw when this candle finished, admittedly a very bearish candle, but it had a bit of a rejection wick. I started shorting this, and let me explain a few reasons why. So firstly, at the start of the day, your view of this pair is to short it, okay? And there's basically, I plotted this grey zone according to that. But the worse than expected CPI data has just made this pair push higher. And I didn't expect this to happen. I didn't expect price to come up this far, up to these levels. Okay, but that's purely news driven. But if we zoom out, guys, you can clearly see there is an area of support and resistance through this area here. Yeah, so let me draw it in. All right, so perhaps I should have drawn this in at the start of the day, my bad, but I just didn't expect price to come up to this level. Yeah, but it did, because that daily candle was so bearish. Yeah, this candle, this is the daily candle. It was so bearish, I didn't expect price to come all the way back up to here. But it did, yeah, and there was a zone here. I just didn't put it in yesterday, but as the day unfolds, I'm looking at this as a potential zone. Yeah, you can clearly see it reacted here, it's reacted here. Yeah, it's a zone of interest. So once I see, this was that daily candle, once I see all this downward movement, and it was a super bearish daily candle that gave us a structure break, you know, it was a great potential trade. Yeah, but then price, yeah, we didn't get a reaction. We didn't get reaction. It wasn't until the CPI brought price all the way back up to here that we got a reaction. And I was very aggressive with this trade, because imagine the retrace as an elastic band. Yeah, so this is the elastic band. Yeah, it's getting pulled. We think, oh, is it reacting here? It gets pulled some more. Is it reacting here? And then it eventually gets pulled so much that it has to snap back. Okay. And it was at this grey zone, and we had a bit of a wick. All right. So because of this retracement, it's, you know, imagine this elastic band. I'm trying to demonstrate with my hands without knocking my mic. Bear with me. You've got an elastic band. You keep pulling. Eventually, if you let go, it's going to snap back quite aggressively. All right. And that's the same with these retraces. It retraced so much up to here that, you know, I was willing to be aggressive with this trade. Okay. So once I saw this, you can actually see it a little bit clearer on the M15, the candle. Yeah, so this candle here was pretty much the candle I reacted on. Okay, so if we go back to the H1, I entered on the close of this candle, guys. Yeah, this green candle, put my stop above here, and then I just took price down to this level here, which corresponded with these last H1 highs. I closed 80% here. Okay, and then I'm just going to let 20% run. I've already moved my stop loss down to here because the market started reacting a little bit funny. So this is for 20%. Okay, remember this is 20%, but I closed 80% down here, made a nice risk to reward of more than one is to one. So yeah, a nice trade on this pair, guys. This is, you know, I know this is something I didn't talk about in the morning and I didn't plot this gray zone, but I just saw this opportunity. Yeah, the retrace, like I say, was so much that it had to snap back, and we had a downward. Our day chart told us we were shorting this pair, and we had this gray zone. So yeah, it was quite an opportunistic trade. I'm in this for 20%, guys. Let's see what it does today. If it comes back and takes out my 20%, I've still made this profit on the 20% as well. All right, guys. So that's how I traded that. Yeah, because I know you're interested in the Discord channel, guys. So that's what I did with pound Swiss franc. In the Discord channel, guys, we will be opening up a channel where I'm there all the time, and you can ask me about different trades, and I'm going to give you my trade ideas. Okay, so we will be doing this soon. Right, next trade idea was this. This is the euro against the Aussie dollar. And yeah, we were trying. Well, let's look at it, guys. Let's zoom out a little bit. So the day chart was in an uptrend. Yeah, we were seeing a clear uptrend, and these lows here just kept holding. They kept closing back within one another. So this low here was never broken. Yeah, because these wicks kept closing back in. And then because of this bullish green candle here, let's zoom in now. Because of this bullish green candle here, we were just trying to take price back up to our blue line. And as you can see, guys, that's exactly what happened. It corresponded with these last highs over here. And then as soon as it hit that level, look at the reaction we've had. This was obviously news driven as well. All that CPI data, which was worse than expected. Yeah. But, you know, we'd already hit target. So guys, that was the idea, and the direction and target were very good. The problem with this trade is, guys, if we go down to the H1 chart, I just couldn't get into it. Yeah, so I'm not, you know, I'm looking to trade around here. Yeah, around this area, and it's already hit target. Perhaps, guys, if you were trading the Tokyo Open, yeah, you could have got in on this candle. Yeah, that would have been a good trade. Put your enter here, put your stop below here, and then take price back up to this blue line. Yeah, this candle here would have been a nice trade. But for me, guys, I don't wake up until up here. Well, don't wake up. I don't start trading until then. And as you can see, guys, yeah, it just hit our target. And then the aggressiveness of the reaction just means we're not interested to get back in this trade. Yeah. And that's represented by the daily candle now as well. It's super bearish. All right, guys. So, yeah, Aussie dollar, Swiss franc, didn't get into pound Swiss franc. Quite an opportunistic trade after the news, but successful. And Euro Aussie dollar, again, didn't have an opportunity to get in on this pair. All right, guys. So that's that. Let's take a look at today's. Yesterday, trading the pound Swiss franc, quite an opportunistic trade after the news. But yeah, if you enjoyed that yesterday's analysis, then please come join us. Yeah, subscribe to the channel, smash that notification button, smash the like button. It really helps support the channel, and we really appreciate your help. Thank you. Guys, I'm going to give you the trade ideas for today, but before I do, let me just remind you of a few things. So we've got our Discord channel. Come join it. You won't be disappointed. Loads of great information in there, loads of great trade ideas. So come join the Discord channel. You will love it. Yeah, secondly, our live stream. We do these every Wednesday, guys, 6:30 a.m. London GMT every Wednesday. We might even start doing them every day soon, if that's what you want. So yeah, remember them guys on Wednesdays. And finally, my mentorship program. If you're interested in being mentored one-on-one by myself, then please drop us an email. All the information you need about any of the things I've just mentioned are in the video description. Right. Enough of all that. Let's look at trades for Friday, the 11th of November. And it's all about the CPI aftermath today, guys. Yeah, it's the effect that has had on every pair, but obviously, most importantly, the US dollar pairs. Yeah. It had a huge reaction, guys, because all the news was worse than expected, including the employment data that come out as well. All the news that come out was worse than expected, guys. So obviously that led to huge dollar weakness. All right. So let's start with the dollar index and how we can see that weakness. Yeah. So remember, guys, it was all about these two gray zones. Because price had just been ranging between these two grey zones. It didn't quite make it here, which was interesting. So we were suggesting lower lows. And then eventually, yeah, after that news, guys, it come breaking down out of this grey zone with this candle here. Yeah, so structure has clearly changed on the dollar index. The one thing I was seeing on the dollar index, guys, is you do have an area of support here. Let me draw that in for you. Okay, so yeah, it has broken out of this zone here, but it's potentially coming into new support. So yeah, must be aware of that, guys. We can't be too gun-ho thinking, woohoo, dollar weakness, let's buy euro US dollar, pound US dollar. Yeah, we still need to be wary of what the markets are telling us. Okay, so yeah, that's what I'm seeing on the dollar index. And like I say, guys, all CPI aftermath, yeah, really made that dollar weak yesterday. So what we're going to look at, we're going to look at a few, get my teeth in, excuse me, it's early. As you can see, the sun is rising on this side of my face, not this side. But yeah, we're going to look at how that's impacted the dollar and how we can trade that today. So I'm going to look at a number of dollar pairs, a few of the majors, and see why we are going to trade some and why we aren't going to trade others. Okay, so these are the ones we aren't going to trade. So the first one is this. This is the US dollar against the Swiss franc. All right. And it's broken out of this. Yeah, so it's clearly in a downtrend, guys. Yeah, it come out, it broke this channel, retested the highs, and then come crashing down, breaking this low. Okay, so structurally, we're in a downtrend. Yeah, and if we zoom in, we've got a super bearish candle. So you're probably thinking, Tom, why is this not a trade idea? Well, let me tell you. Because firstly, we have better US dollar pairs to trade. And secondly, it's just become a little bit too oversold. Yeah, it's all the way down here. Look where the moving average 20 is. Remember, the moving average 20 is my gauge to tell me how overbought or oversold something is. If it's a million miles away from the moving average 20, it's clearly very oversold, or if it's up here, very overbought. And this is very oversold. Okay, so this is why US dollar Swiss franc didn't make our criteria today, although I still think it has room to the downside down to these lows here. Yeah. All right, so that's why that didn't make our criteria. The next one that didn't make our criteria and was a US dollar major was this. This was the US dollar Japanese yen. Finally, we have seen a structure break on the day chart for the US dollar Japanese yen. I would like to congratulate all of the people who use yen in this milestone, because this hasn't happened for a while. So it was all about this grey zone. Will it hold? Will it hold? Will it hold? No, CPI happened. Okay, CPI happened and it didn't hold. We are now in a downward structure. We have lower lows. All right. But the problem with this pair, guys, is this. If I draw this in here, we clearly have a piece of support here. Yeah, you can see, guys, it once reacted at this level and price is at this level. So although we're seeing, you know, dollar weakness, this is at a support zone. So remember, guys, we don't short into support. The t-shirts are coming. I know you all want one with Simply Forex. Don't short into support. We will make it happen, guys. What colors do you like? Do you like blue, red, yellow? Let us know. So that's why US dollar Japanese yen isn't a trade idea for today. Also, one that isn't a trade idea for today is pound US dollar. Okay, so this is the pound US dollar. This is the day chart. And purely, we've had this gray zone here mapped out for some time. Yeah, we thought price could come back to this level here, and it has. So again, yeah, we cannot buy into resistance, or we cannot have persistence into resistance. Another t-shirt coming your way. Yeah, so we cannot. Yeah, although it's a super bullish candle, yeah, I still think potentially it has room to the upside, but I cannot buy into this gray zone. Yeah, I cannot. It doesn't compute in my brain. All right, so pound US dollar, no matter how strong or how weak the US dollar is from yesterday, I cannot trade that. All right. The first one we can trade, and now we're getting into my trade ideas, guys. So I hope you can see why we couldn't trade those ones, and I'm going to show you why we can trade these ones. And the first one is this. This is the euro against the US dollar. So yeah, clearly in an uptrend. Yeah, and that uptrend has continued. And we've got this super bullish candle like every US dollar pair did. Yeah, but this time we have a bit of room to move into. Yeah, I'm not seeing the next area of support until over here. Yeah, this area here. This is the next. So it's because it's broke this price here. Yeah, so I'm not seeing this until this area here. We have some potential resistance. Okay, we zoom in again, you will see that we still have a good 70, 60, 70 pips to move into up to this blue line. All right, so I like this one. So that's what I'm looking for in the day chart, guys. I'm looking for structure. I'm looking for price action. I'm looking for support and resistance levels. I'm looking for what the candlesticks are telling me, and I'm looking for room to move into. And this has room to move into. All right, guys, so Euro US dollar is the first trade idea for today. If we drop down to the H1 chart, because as you know, this is our entry time frame. And we've got a few gray zones, guys, all right? But it's going to be a tricky one. So you could just trade the first bullish candlestick pattern that you see. Yeah, because of that day candle is so bullish, you could do that. Or price could come back down to this level here, which corresponds with this last H1 dip lower. Yeah, if it does, great. We can get in here. We need to see a bullish reaction, take price up to here, close 80% and leave 20% to run. Okay, so that could happen. Or price could even decide to come back down to this gray zone, which corresponds with those last daily highs. If it does, again, great. We can get in, yeah, after a bullish reaction and take price up. Yeah, close 80% here. That's how I roll, guys. I close 80%, secure some profit, let 20% run. All right, so a few ways we can trade this, guys. The next trade idea for today, which is obviously another dollar pair, is US dollar against the Canadian dollar. And again, we like this one. If I zoom out, yeah, we don't see any resistance until here. So we have room. This is room to move into. Yeah, that's what I need. I need room to move into, even in my personal life. Yeah, I don't know what I'm talking about. But yeah, it's got room to move into before it starts hitting potential support. Okay, so that's what we like. Also, what's not to like about this? We've had a clear, it was in a trending market, sorry, a ranging market. We got a break of these lows with this candle, and then this downward momentum has just continued from yesterday and that bad CPI data. Yeah, it's very news driven, but it's surprising how many times news follows the technicals. Yeah, you were seeing a lot of the US dollar pairs were in uptrends or downtrends, and the news magnified that and made the trend, sort of secure. Yeah, so we are clearly in a downtrend now. You'll be amazed how many times that happens where data follows the technicals. Okay, so yeah, we're in a downtrend. We've got this very bearish candle here, and all we want to do is take price from one of our grey zones back down to this blue line. Okay, so let's have a look on the H1 to see where we can enter. So guys, again, because of the bearishness of the candle, you could trade the first bearish engulfing candlestick pattern that you see, or just any candlestick pattern. Or we can do this, or we can wait for price to come to this grey zone, test these last H1 highs here and this low over here. Then we get a bearish reaction, guys. We can enter the trade, take price back down to here, close 80%, that's how I roll, and then leave 20% to run. Okay, so that's the second idea. So we could trade the first bearish candlestick pattern that we see. We could trade from this grey zone. And this grey zone is just the bottom of that daily range. I don't expect it to get up to here, but if it did, yeah, you know the drill. We can start looking for shorts from here. All right, but US dollar, Canadian dollar, we're looking to short this pair as well. And the third US dollar pair, because again, let's remember what I'm looking for. So this was clearly in a downtrend. Lower lows, lower highs, lower lows. This high kept holding, but at the same time, it was making higher lows. This is also a red flag that structure could be changing. And then sure enough, kapow, Batman noise. Kapow, this super bullish candle breaks these highs. Breaks this important grey zone. So we have had a structure break. We got higher lows, and now we have higher highs. Okay, clear uptrend. So first of all, I look for structure. We like the structure. Then I say, what are the candlesticks telling me? Okay, and that candlestick right here, what is that telling you? Buy, I hope. If that's telling you to short, stop trading now, move away from your computer, it's not for you. But that is obviously telling you to buy. All right, so and then obviously I want to just plot my support and resistance levels from where we can trade. And we just want to come from our grey zone up to this blue line here, which corresponds with these last lows here. It'll be more clearer on the weekly chart. Let me just show you why that is my target. So you can see here, guys, there's these lows here. All right, so we've got room to move into. We like room to move into. So guys, we got that. Let's drop down to the H1 chart now and see how we're going to trade it. So again, because of the bullishness of the candle, you could trade the first bullish candlestick pattern that you see. Okay, I mean, this is potentially one now, but like I say, I like to wait for the Europe and London to open. So there's some volume in the market, but this candle here is quite tempting. But so we can trade the first bullish candle that we see, or guys, we can wait for price to retrace into this grey zone. This corresponds with those last daily highs and also this last swing low on the H1. All right, guys, so we could trade in here, wait for a bullish reaction, get into the trade, close 80% at the last H1 highs, and then leave 20% to run. 80-20 rule, we love it. We also love it in these volatile times. Use it. Secure profit, let trades run. All right, guys. So yeah, they're the three US dollar pairs that we're interested in today. So Euro US dollar long, US dollar Canadian dollar short, and Aussie dollar US dollar long. And I hope you can see how they are more appealing than the other US dollar pairs that I showed you. Yeah, they're just more attractive to trade. And finally, we've got one more trade that I'm interested in. It's the New Zealand dollar against the Japanese yen. All right, because we've just had a structure break yesterday. So not only is it up at these weekly highs up here, yeah, these are all weekly highs, and this one too. Okay, so not only are we up these weekly highs, and we've had a strong push down, all right, we've also, if I zoom in, we've had a structure break on the day chart. So price was in an uptrend, yeah, but then finally, like I say, the yen has seen some downward movement, and we've got this bearish candle here that broke these last lows. Okay, so structurally we're in a downtrend. We've got a bearish daily candle, and the idea is just to come back down to this psychological level of 84.50, which corresponds with these lows here as well. All right, so yeah, apart from all the US dollar pairs, I am looking at this today as well. New Zealand Japanese yen short. If we go down to the H1 chart now, yeah, we've got a couple of grey zones that we could trade from. So we've got this grey zone here. Yeah, if we get a bearish reaction, we could enter the trade, take price back down to these lows, or even just take it back down to this blue line. Okay, if that doesn't happen, guys, then price could retrace all the way up to here. There's this area of once support and then resistance. Okay, and again, if it does, guys, yeah, we can enter the trade after we see a bearish reaction, take price back down to these lows, close 80%, yeah, leave 20% to run. All right, guys, so they're the trade ideas for today. If you're enjoying this morning analysis, I hope you are, then please come join us. Subscribe to the channel, smash the notification button, guys, and also smash that like button. It really helps support the channel, and we can keep these videos coming every morning. Right, news for Friday, the 11th of November. So nothing overnight, guys. The first piece of real important news that we're looking at is this. At 7 o'clock, London GMT, we've got 1, 2, 3, 4 5 pieces of important, 6 pieces of important news. So we got 5 pieces of important news coming out of the UK. We've got GDP and manufacturing production. All right, guys. So that is really going to move the pound. Yeah. So must be aware of that, guys. So yeah, as with CPI, a lot of eyes are on the GDP figures as well, guys, because we want to see growth. We don't want to see potential recession figures. All right. So yeah, all of that coming out at 7 o'clock, and out of the euro, we have German CPI as well at the same time. So again, guys, you saw how important yesterday the dollar CPI was and how much that impacted the markets. So this won't have as big an effect as that, but this could still have a big effect on the euro. Yeah, the CPI figure at 7 o'clock. If we carry on down, guys, after that, as you can see, there's no other real news that we're interested in today. So, yeah, that's it, guys. I hope you've enjoyed the vid. If you have, please subscribe, like, and share. I hope you have a fantastic trading day, guys, and a great weekend, and I'll see you on Monday.